Hey, so you want to buy your first rental property, but you don't have a massive pile of cash sitting around? Well, guess what? Most real estate investors don't start with deep pockets, and that's completely fine. The real game in real estate here is knowing how to finance properties strategically, and today I'm going to break down exactly how to do that. You're about to learn multiple ways to finance your first rental property, even if your bank account isn't looking like a trust fund. Talking about VA loans, FHA loans, conventional financing, private money, seller financing, and a few other creative strategies that most beginner investors just overlook. Before we get into the good stuff, do me a favor, hit that like button and subscribe. This channel is all about helping you build financial freedom through real estate, and I drop actionable investing tips and strategies every single week. Yeah, I have a cold, so let's dive in anyway. First, let's talk about traditional financing. These are your bank loans. The first and most common route is traditional financing. This is getting a mortgage through a bank or a lender, credit union, or something like that. And if you have decent credit and steady income, this can be one of the simplest ways to buy a rental property. But some banks will not lend to an LLC, even if you're a personal guarantor. Conventional loans typically require about 20 to 25% down for investment properties. You're going to need a credit score of at least 620 to 640, though higher scores get better interest rates. The bank is going to give you a bankonoscopy. It's going to look at your debt to income ratio to make sure that you can afford another mortgage. And here's the biggest downside. Coming up with that 20 to 25% down payment. For a $200,000 property, that's $40,000 to $50,000 in cash. And this can be tough for a first-time investor, but don't worry, I got plenty of ways to get around that. Let's talk about one of my favorites, house hacking. Use a low down payment loan. So if you don't have a huge down payment, house hacking is one of the best strategies out there. This means you're buying a multifamily property or a bigger house. You're living in one unit or one bedroom, and you're renting out the others. The beauty of house hacking is you can use low down payment loan programs like FHA loans, which is the Federal Housing Administration, where you only have to come up with 3.5% down. You're going to need a credit score which is substantially lower at 580 for the 3.5% down, or 500 plus with a 10% down payment. You have to live in the property for at least 1 year, but after that you can move out and rent out the whole doggone thing. If you buy a fourplex for 300 grand, your down payment's 10,500 instead of $60,000 with a conventional loan, and the rent from the other units could cover most, if not all, of your mortgage. Okay, vets, let's talk about your VA loan. This is a 0% down or $0 down payment, no private mortgage or PMI. You have to live in the home for 1 year, but then you can rent it all out. If you're a vet, the VA loan is hands down the best financing option out there. I'll say it again, the best financing option out there. No down payment means you're getting into a property with no upfront cash, and that is a huge advantage. Let's go over a few creative financing strategies. So maybe you don't qualify for traditional loans, or maybe you just don't want to go the bank route. Well, that's where creative financing comes in.
Hey, do you need help running your business? I don't know what I would do without my executive assistant. Get outsourced solutions for every need by visiting Reba Global. Check them out now and get help for just about every aspect of your business today. From marketing through property management and even administrative virtual assistants. Check out Reba Global. The link is in the show notes.
So you can get the seller to finance. Instead of getting the loan from the bank, you make the payments directly to the seller and they basically hold the mortgage. This is great for sellers who own the property outright and don't mind collecting monthly payments instead of one lump sum. You can negotiate better terms like a lower down payment or even 0% interest in some cases. You can get a lease option, which is like a rent to own. You rent the property with the option to buy it later. A portion of your rent goes towards the purchase price, which is great if you need time to improve your credit or save up for a bigger down payment. Now I live by the BRRRR strategy. That's buy, rehab, rent, refinance, repeat. You buy a fixer-upper at a discount using short-term financing or hard money. You renovate it to increase your value, then you rent it out for some steady cash flow. Once you have it rented, you can refinance that thing with a long-term mortgage to pull your initial investment back out. Then you can repeat that process with another property. BRRRR is one of the fastest ways to scale a real estate portfolio while recycling the same capital over and over again. I'm going to do a video next week about the warnings about using any of these strategies because sometimes your assets get ahead of your cash flow. Now, OPM, let's talk about other people's money. Most new investors think they have to use their own money, but the truth is, best investors use other people's money to buy properties. This is a private money loan, where we borrow from individual investors, but not banks. They're faster and more flexible than traditional loans. Sometimes they have higher interest rates, but they're great for quick deals. But in life and in real estate, everything is negotiable. Let's talk about hard money. These are short-term loans, usually around 6 to 12 months, that have higher interest rates, about 8 to 12% right now, and fees. But you get quick approvals. Use them for fix and flip deals, or I use them for BRRRR investing. Never overlook a partnership. Partner with someone who has money, but no time or experience. You do the legwork, you find and manage the deal while they provide the funding. Guys, 50% of a great deal is a heck of a lot better than 0% of no deal at all. And if you got to split the profits 50-50, whatever terms you negotiate. Like I said, life is a negotiation. If you have the knowledge but no cash, finding the money partner, well, that's a game changer. Here's another strategy that I've used. Using a home equity or a retirement account. If you already own a home, you may have access to hidden source of funding. I'll do a video later on about replacing your mortgage with a home equity line of credit. But if you get a second home equity line of credit, a second mortgage against your property, you're borrowing against your home's equity to buy a rental property. Interest rates are lower than credit cards or personal loans or hard money or private money for that matter. For example, if your home is worth $300,000 and you owe $2, you may be able to take out about $50,000 on a HELOC. That's plenty to cover the down payment on a rental property. There's another strategy that I've used, self-directed IRA, SDIRA, where you're using your retirement funds to invest in real estate and you're doing it tax-free. I'd recommend a Roth, but check with your CPA. You have to follow IRS rules, not personally living or managing the property, and it can't be anyone in your direct line, your nuclear family. But Bud, how do I choose the right strategy? Look, with all these financing options, how are you going to choose the right one? If you have good credit and a down payment, conventional financing or FHA loans are solid choices. If you're a vet, VA loans are a no-brainer. If you're short on cash, I got a student of mine who's doing it right now. He's house hacking, he's using an FHA loan, or you can use creative financing, like seller financing or a partnership, and that can be a great way in. If you're open to renovations, borrowing hard money loans can help you scale quickly. A student bought a house, he's renovating it, and he's renting out the rooms. It's going to cover his mortgage. The key here is to match your finance strategy with your situation and goals. And now you got a good idea and a full toolbox of ways to finance your first rental property. Even if you're starting with limited cash, the biggest mistake you can make is thinking you had to save for years before you buy your property. Real estate is not about how much money you have, it's about how resourceful you are. The best investors find ways to leverage financing and grow their portfolio quickly. If you found this valuable, do me a favor, hit that like button and subscribe, and drop a comment below with the biggest takeaway. If you used any creative financing strategies before, or if you think that I'm wrong, I'd love to hear about it. So now go and take action, start building your rental empire, and I'm going to see you in the next video. Until then, let's aim high. Go make it happen.
Are you a veteran or first responder and you're ready to start your journey into financial freedom through real estate investing? Visit budevans.com and sign up for a free strategy session today. Whether you're looking to wholesale or flip properties or do what I did and build a passive income portfolio, I'll help you create a customized plan to achieve your goals. Don't wait, take action now and unlock your potential for success in real estate. Let's turn your dreams of financial freedom into reality. Head to budevans.com and schedule your strategy session now.